Hello, everybody. Welcome to Monday. The S&P 500 was down 0.25% today. The Dow was down, the NASDAQ was down, but the portfolio that I presented on Friday, which is our traditional model, I showed the stock parts and the bond part, was actually up today, even in a down market when all three of the indexes were down. And the reason is because we've designed that portfolio, to deal with inflationary environment, and that's what we're dealing with today. Interest rates came up some. There's some more fear of inflation. And so, you got to be on the right side of the equation. And actually, I'll show you, it's kind of dramatic. If you look here, I'll show you an example. So this is called a heat map. All right. So we got our value stocks here. These are kind of our lower price stocks. These do better when interest rates are going up, which is what happened today. We got our growth stocks, right, which you can tell did worse today. And these are kind of the high priced, high potential, companies that are out there. A lot of tech companies fit into this side. And so, if you look, that's just the one day. Here's some green. This was almost green, right? Last week, bad week actually, because that CPI, the inflation number came out. It was pretty high. So, but look, even then, so the value did a lot better, at least in compared to the growth. And if you look at the last month, green versus red. If you look at the last 3 months, it's really incredible, actually. So, double-digit rates of return, and this is the US market barometer. So this is essentially the entire market that you're looking at pushed into little squares. So all of the companies in this square had an average rate of return of 11.3%, for example, versus all of the companies in the small growth category had almost negative 17%. So this is what's going to happen going forward. And I know this seems like a really big difference, and it is, but it's just starting. This is just the last 3 months. And so you really, I think we're going to continue to see a push here towards this value side. If you're not on that side, you're going to be over here. Your accounts are going to be suffering and what have you too. So that's the way it is right now. That was exactly the opposite last year. When you looked, growth was all green and value was all red. And again, the value side has companies that got affected by the pandemic who are now being positively affected by the reopening. And so that's happening, combined with the fact that even traditionally, they do better in an upward interest rate environment. So, for example, banks, they like an upward interest rate environment and they make more money and such too. So that's what you'll find over here. Whereas the small tech companies and what have you aren't going to benefit from that as far as that goes. So really fascinating time frame right now. I feel like we got in a little bit early. Some of the stuff, the value stuff that we got into, we still own, but took a while for it to really take off. But certainly in the last month, it's been doing quite well. Today was great. So just we're in the right side. There's no place else to go. We know interest rates. I feel very strongly interest rates are going to continue to go up. And I feel that, the economy is going to continue to heat up and that the reopening is going to continue to come at us. And I'm very hopeful that things will work out to be somewhat even because the globe, the world isn't reopening as fast as we are. And that could allow a little bit less of this economic explosive growth, which might help with this, higher inflationary period, and certainly helps in terms of the bonds. So when our bond yields go up like they did today, eventually that tends to attract international buying, and so that kind of keeps those bond yields from going crazy. And that's exactly what we want. They call it the Goldilocks, place where it's not too fast on the growth and not too slow on the growth. It's just right. So that's what we're hoping for. So far, that's actually what we're getting, to be honest. It's just the market is making bets and looking forward. And again, none of us have been through a pandemic reopening, at dealing with this particular type of market. So it won't be a straight line, but we're in the right spot. This is working really well. I'm very, very pleased. So if you want to check out that video on what might work for an inflationary environment, really, really good piece. It's getting a lot of traction right now on our channel. Of course, you can subscribe to the channel, hit the subscribe button, and you get notifications when we put things on there too. So look forward to talking to you tomorrow. Thank you very much.